kind of decent right now, or how things going?
Yeah, everything's good. We are in here in Mexico. We have like it's about to begin like the hot season of the year
Yeah, yeah,
from March and April, and in June it's when the rain season begins. So uh, like the weather is hot right now, but I liked
yeah.
it. I prefer cold weather, but yeah, it's everything is good. Thank you.
Interesting. Awesome, awesome. Yeah, it's definitely getting a little bit better here in Florida, so it's nice to just see the weather shifting all around. I know that, just sun just brings a lot of energy and positivity to everybody, and it's really important to try to absorb as much as you can. I know some aspects of the world where it's really cold and you're just unable to do that, but just make sure you got that vitamin D and yeah. But
Yeah.
anyways, there's life. We're human. You guys are human. We are all family. I will ask you to kind of share your screen, engineer. If you're able to record your screen, awesome. If not, we understand. There's been technical difficulties for a lot of individuals, um, and just data feeds, OBS, etc. So whatever it is, if you're able to do it, awesome. If
Yeah.
not, everybody here in attendance will absolutely get the most out of it every single time. So, um, those that are here, please take notes. You share your notes, you get XP. It's basically just positive reinforcement for you doing something that you know you should already do if you're having wisdom dropped. So, without further ado, um, can anybody in the chat please confirm they can see the engineer's screen?
Okay, so let's begin. In previous live streams that I did, basically I was trying to show you how to use the opening range gap and how to the framework that I use, but I want to use now for the people that want to trade like for the launch session or PM session that they doesn't have the time available to trade, and like the components that you should look for that specific framework. Everything that I will be mentioning here is not by my. It's not. It's all by ICT. It's all the content. It's in his channel. This is not something that I am making up for me. It's everything. It's in his channel. So it's a really simple framework. But I want to showcase the tools and how to properly set up your charts in order to take advantage of these specific frameworks. Okay. So first of all, we have uh, the main component of this specific framework is time-based uh, liquidity, time-based range, and everything is related to a specific time windows. This is what I like the most about these specific frameworks, because you don't have to guess about the specific liquidity pools or for what is this, the low or the high that I should look for in during the trading session. So it's really simple. Okay, so we have these specific time windows. Okay, for to look for the setup. We have first the PM session, lows and highs. Okay, this specific range is for from 1:30 to 4 p.m. New York time. Okay. 30, 4 p.m. This is the PM session. Okay. we are gonna look for if we have a range or what the previous PM session did. For first, we are gonna annotate the previous PM session high and low in your chart. Okay. Then, before this time window, we are gonna look for noon to PM. Okay. So this is the launch time window. And then we have 9:30 to noon. Okay. Then we have the overnight highs and lows. And this is for all the liquidity that is built after the regular trading hour session. Okay, so we have the London highs and lows or overnight highs and lows. Anything before 9:30 the next day here is all this range from here to here is overnight. All this range. Most of the times we are using this specific range as an area for accumulation or build a sentiment for the 9:30 opening. So this is the specific time windows that we should look for a time-based liquidity in order to engage for the setup. Okay, so now we are gonna change the chart a little bit. And we have now here the regular trading hours chart. And I'm using the Liquidity Depth Pro to have these specific time windows, highs and lows in the chart, okay? And the power of 3, but I'm using the specific configuration for the one set for life time windows here, okay? So I have my custom chart. Sorry. Okay, so now when we are trading, the PM session is after noon here. We should refer to the specific liquidity pools uh, engaged from the 9:30 to noon and see what this session did. So I use um, these specific frameworks. Okay, so the AM session decline, PM session reversal, AM session rally, PM reversal, uh, or are we expecting a consolidation during the AM session and PM decline or PM rally, or this is like the trending day, two session down close from lower prices, looking for lower prices, or we are using, sorry, this is the same as two session up close. Okay, so for example, today do you see how from yesterday, between the AM session from yesterday and the PM session, we create this imbalance right here? Okay, so what did the AM session did? We gap lower and we rebalance this regular trading hours gap. This one here. We close this gap and we reach one deviation from the regular trading hours gap. This is the profile that I call the deceiver. We gap lower following the pre-market hours trend. Everybody's trying to short the market because of yesterday's move, but we have buy stop spending from pre-market hours and overnight. So once we reach and rebalance this regular trading hours gap here, now we are looking for the 50% of the gap and to take the overnight buy side and reach the previous PM session range liquidity, the buy stop spending here. Okay, so it's this specific candle here that I have. You see? So PM session was a range, was a consolidation. So during the AM session, I'm expecting to rebalance the gap and take these buy stops. Do you see how we reach the open price of the previous launch session here? And we reach one deviation from the regular trading hours gap. We fail to take this buy side liquidity from launch, and now we are closing below this gap that was formed here. Okay, so when the launch begins at noon, the profiles that we can anticipate is that during the launch we can take the AM buy stops, or we rebalance an imbalance from the AM session in order to continue the move that the AM session did. So today you can see how during the opening range and the AM session we create this one side move. So if I am expecting lower prices, I would like to see if we can take the AM session highs or rebalance inefficiency, or we reach an auto block from the previous session, that is the AM session. Okay, so we have this auto block on the 15 minutes. And this is we are closing below the previous PM session high here, that is between this low and this high here. And I'm looking for the sell stops pending from the previous range that we have this. So we move from here down here. Now we are inside of the regular trading hours gap. and I'm looking for the same thing, but with the correlated markets to see if I have an SMT as a confirmation for my trade idea. Now we are in the PM session. Do you see how Dow took the launch lows right here? While ES failed to take this specific time-based liquidity, and Nasdaq also failed to take this one. So we have a time-based SMT between sessions highs and lows. Okay, this is how you should trade the PM session. You are considering what what launch and the AM session did. Okay, so now once we have this confirmation that one of the assets took the opposite liquidity like launch here, we are targeting the opposite level like these buy stops, and we have here the opening range gap. Okay, so we are using time-based liquidity to frame time-based SMT and time-based setups. Basically, we're using specific highs and lows and specific profiles during specific days. We have a large range day yesterday. It's most likely that based on the profiles, we are not going to have a two sessions down close or two sessions up close. Okay, so most likely that we are going to have a consolidation profile, this specific. Okay, so we have uh, for example, this consolidation AM rally, PM decline, or it could be an consolidation AM rally, launch decline, and PM session decline. So in these specific profiles, this is like a very generic way to see the market. But we have, look here, index SMT on lows, 15 minutes, 60 minutes PD array. And this is specific part of the day where we have rely of time of the day is the market on close. Okay, so we can divide the PM session in two sessions. Okay, so PM session is 1:30, 4 p.m. But inside of this time window, we have the last hour of the power hour of the day. So if we haven't reached a target that we are looking for, price should accelerate during the last trading hour of the day. So in this specific uh, layouts or profiles where it says rely of times of the day, we are looking for if the price retrace into the previous range or gravitates towards the opposite level of liquidity or an inefficiency in the 15 minutes or 16 minutes chart. So this is the framework, the layout that we should look for every launch or PM session ideally. So the trade idea is framing the trades based on the launch. So I don't know if this is clear, and I'm using just these tools. Okay. Do you see how we run the PM session range during the AM? But we have these wicks and all these buy stops. We have SMT here. Ideally, we should run for this kind of like seek and destroy profiles. We can run again these cell stops here and then move higher, but I'm not a really fan of trading the PM session, being honest. I prefer doing the first minutes of the day, the 19 minutes of the day, because it's really easy to spot what the market is doing based on the framework that I'm telling you. So we have, for example, here, overnight liquidity, we run the PM session range and we retrace and look the standard deviations from the regular trading hours. 1, 1 here. So this is a seek and destroy profile. Okay, so I don't know if this helps you. I think that it's really simple. You have your layout with the time-based liquidity, and you are looking for the profiles based on what the launch did. So, for example, here on Dow, we have this inside candle, PM session. We took one of the sides of the candle and move lower, this one, you see? Then the launch session for Dow was an inside candle, and we take the low here. And that this is an SMT with the correlated assets, and now we are moving to the opposite side of the range. That is, this orange candle is the launch session or launch candle. Okay, so, and also I'm using the standard deviations here in this specific framework. You see how we reach 4 deviations and the consequent encroachment of this regular trading hours gap here. And this is a gap divergence this is the way that I like to call this. For example, we fully rebalance that gap on Nasdaq here. Okay, so ideally my thoughts for the PM session is to come back and to see if one of the assets can take the previous launch highs right here. This now we are closing above the consequent encroachment of the gap. This is a classic way. This is really easy to spot if you are in a seek and destroy profile when we are coming back many times to the gap. We close below, then up, and then we trace again, and we are trading inside of this. This is a seek and destroy profile for this. So, but if you can trade the AM session, wait for launch to print and trade your PM session based on what the previous launch session did. It's really simple. We are using the previous session to frame the next one. Okay. And you can anticipate these like SMTs, setting alarms for these liquidity pools. You put your alerts on, and if, for example, this one took this launch low, you will receive the alert that, and the others ones didn't. So you can look into this layout and wait to see for a confirmation. Okay, so do you see how now DAO try to leave this gap, and we are is struggling to leave that because this is a seek and destroy profile. I think that all the live streams that I am doing, it's like this kind of conditions. But yes.
What's going on? We got two in the house.
Yeah, I didn't want to interrupt. My man was spewing some sauce. I couldn't interrupt.
Love the Algo SMT. How you doing?
Doing good. How are we doing, Jefe?
Everything good, hermano.
Good to hear from you.
I really like how you did the session power of 3 with the colors over there. Can you go over those settings real quick? I know
Yeah.
that you have like the lunch one that you talked about, but the regular, I guess, black candles are those. I just wanted to confirm the sessions. Yeah, it's the
Yes.
9:30.
I have the AM
Really
session
nice.
is the black candle,
Mhm.
lunch is the orange candle, and PM is the red candle. So it's nice. You can see, for example,
I
we
like how
have
you were able just to quickly see those ranges that you were pointing out, just like drawing like a little small visual box just to obviously talk about it, but seeing it just visually, you can see that SMT immediately. It's actually kind of cool.
yeah. For example, this is an ES. We have this imbalance between the PM session and the AM session from yesterday. We rebalance that, and we come back again into the range. Now price when the launch was open, we rebalance again that inefficiency and then move lower. Now we are trading inside of the gap. So I like this because you can visualize really easy the inefficiencies. Look, for example, here in Dow, this is a small gap here between sessions highs and lows. And this volume imbalance that we can see like a volume is actually the regular 3 hours gap. Here. Ideally, I prefer to see like an SMT, but like on the AM session, for example, if we take this high and one of the others down, I think it's because we have more liquidity on this specific time window because it's the first hour of the session. So if you have an SMT between the, like for example, like this one, it's better than just like this low. But yeah, this is an internal scam. Are the red horizontal lines that you see in the chart drawn by you or by the tool? It's by the tool. It's this one. This is a liquidity depth pro, but with the one setup for live on here. And if you change to the electronic trading hours, you have like the London and the overnight highs and lows also here. And all these candles is the overnight price action. For I can share with you the layout if you want. just click on the link, share and copy in your trading view, and you will have the same settings that I have right now here. So the idea remains valid here. This is basically the framework that I trade, the one set up for life. I use another gaps like the new week opening gap, but to give me the narrative and the framework for a high time frame perspective. But for my intraday trading, this is like the core of how I trade. Will you share the framework data for the same? I don't understand the question. Yeah, this is how how you view. Yeah, we have, for example, when the AM session is about to begin, the first thing that you should look for is what the previous PM session did, basically, and where you are in relation to that specific range. Look, this was one trade that I took yesterday. This was yesterday, price action. Do you see how during the last trading hour of the day, we took the AM session highs here on regular trading hours? Do you see how we fail to do that on ES here? This is an SMT on regular trading hours. So I was anticipating that this high is protected. I don't need to come back and take this previous PM session high on the next day at the open. So what I was expecting is lower prices. I have this huge gap here below that remains open. And market opens, rebalance 50% of the consequent encroachment of this gap, and then we start to move lower to rebalance this gap. Today, we rebalance completely the gap here. And now we take this previous PM session buy stops. You see, it's the same framework. I'm considering what the previous session did in order to anticipate what is the next session doing. This is a deception, yeah. How do you identify is it professional gap or armature gap? I don't know about those gaps. And hello, brother. So, are your entries on the 3 minutes time frame? No, I'm using this time frame because we are back testing this time frame inside of the Discord, but you can use a 1 minute or whatever time frame that you want to trade once the logic remains the same. But the framework is the same. So we are anticipating or analyzing what the previous power of 3 did but instead of a regular power of 3, we are using the one setup for life custom setups here. And we are looking for SMTs between highs and lows of these specific sessions as a confirmation to see if we can move to the opposite side, like today. This is inside candle launch. We have an SMT here, these lows, and we rally. We are moving to the opposite side here. So we frame the actual session based on what the previous did. See you, hermano. They are inside of the Discord, my Discord, this one, if you want, but ideally you should study the videos from ICT. This is core content month 10. It's the same. These screenshots are from ICT YouTube. They're not mine. How do you frame it on case likely yesterday? Like there was not S&T on the launch time. Okay. We had an S&T. Okay, so this is the PM session from yesterday. Okay, when you are not expecting to take the high to continue the move lower, you can create your previous session. And you will have the lower portion of the launch session, the 50%, and the upper portion. Okay. Here. Okay. So thinking in power of 3, if you want to short, you want a fair price in order to do that. So you're expecting, if the market is heavy, most likely that we are not going to rebalance the 50% of the previous session. We can look for a setup on the lower portion of this range. So this is the launch session, and this is a 1:30 open PM session, and you are looking for a stop rate inside of the quadrants of the previous session. You have this one in the lower quadrant, and this one near to the equilibrium of the previous launch session. Okay, so with that being said, we are gonna see if we have an extra confluence in order to trust this as a short. Okay. Look, for example, here on ES, we have an SMT here at the lows, but since the order flow is bearish, I'm not trusting this as a, this is valid for the retracement, but since the order flow is bearish, I'm expecting to fail this SMT, to fade this SMT, okay? So we have relative equal lows here. This is an extra confluence for you in order to short this range, and we do the same from this specific time. So low, high of the launch session, and look, for example, here the bodies of the lower quadrant. It's basically the same range. We are trading, you see, we have this imbalance right here, just above the upper quadrant of the launch. And we take this, and let's see what Dow did during the launch. Okay. So, for example, here Dow is telling us that was the stronger because Dow was trading above the upper quadrant of the launch session. We almost rebalance the 50%. So even if we don't have an SMT, you should look for, if you're looking for short, Dow in this case is not the best short. But if you don't want to, ideally you should look for an SMT around these levels. That's an extra confluence in order to be higher probability. But yeah, this is the framework for the one setup for life. But this is like a little bit more deeper. It's not like only looking for highs and lows. Now you are looking for the previous equilibrium of the range or the quadrants of the previous session to look for a confirmation inside of those ranges. This is like a little bit more deeper, but the foundation of the one setup for life, it remains the same. We are looking for the previous session to refer the next one. And the same, you are looking for the equilibrium of the session or the upper portion of the session. Let me put this a little bit more clear. Okay, this is the launch from today. We had an SMT at the lows. Target is 50% of the range, upper quadrant, and ideally the buy stops from launch. You see, we are using the previous session as a power of 3 to frame your trade idea. So look how we are fading. We're failing to close above this quadrant. So for example, measuring the sessions based on the quadrants of the you can see how Dow is trading at the upper portion. This is telling us that Dow is stronger right now. Do you see how Nasdaq is not leaving the inside of this, the 50%? Is struggling to reach the upper portion of the launch session, and Dow is now trading here. And let's see if we can take the launch high that was the target for this specific framework. Yeah, launch is for noon to 1:30. In the core content, ICT said that it's from noon to 1. But then on the 2023 mentorship, he said that we should look for 1:30 for the run of liquidity. So if you studied both the core content and the 2023 mentorship, use the 1:30. Yeah, core content month 10 is I think it's the best month for index future traders. Yeah. We are about to come back again to the opening range gap. Dow. So this was a nice scalp here, right here. Macro, yeah. Let's annotate that. Oh, remember that I told you that the PM session has like a micro session that is the last trading hour of the day. This is the time window that for the first macro that is kicking in right now. Yeah. And this is the macro that ICT implied was teaching us since core content, where he said rely of time of the day. This is the last hour of the day, the market on close macros in this specific profiles. So let's see if during this macro the market should gravitate fast towards the opposite liquidity pool. In this case is the launch high. Do you choose a pair according to the strongest, or you just play NQ no matter what? Lately, I've been trading. Yes, again, I was trading only Nasdaq, but now I'm trading yes again. But ideally, we should look for to trade that. If you're looking for longs, the strongest asset. You see, for example, here Nasdaq was retracing like a chop here, and Dow was better for the long, like really clean. Even if Dow was the one who took the sell stops from launch, the way that we are measuring with the percentage of the previous session can help you to anticipate, like measuring that it's a different way to measure strength of an asset, not only highs and lows. You can use PDRAs, you can use gaps, and you can use any time-based element, basically, not only highs and lows, to anticipate that correlated strength in the market. No, and you can use, for example, also, yeah, I do with the regular trading hours gap, for example. Look, let's quit everything. Okay. Look at this example. This is only the regular trading hours chart, 15 minutes. I use the regular trading hours gap to measure strength on these specific assets. Now look, for example, that's what I told you. When we are coming many times to the opening range gap, is a sign of a consolidation. Now we are failing to close above the launch high. So most likely that we are gonna come back again to take look how clean are these lows right here. I don't use dollar at all. I was analyzing the dollar from the 2022 mentorship, but doesn't show like a strong correlation right now with the index market. So I prefer only to use these three markets. Beautiful. That chart is fire. Yep. Look here, for example, we are having this SMT. And we are in the last trading hour of the session, and we have smooth edge. Also Dow here. But the fact that Dow took this can validate as an order block. If you are shorting Dow, you are not expecting to take maybe this high. So inside of this range, you're looking for partial. This is core content, month 10. You should study all the month. Ideally all the core content, but at least month 10 is really good for index trading. Must be random. Yeah, speed. See, we are going to move fast. You see how Dow is coming to this as an auto block. Look the upper portion of this candle. If we are going to move lower, we shouldn't close above of the 50% of this candle. Then, if this condition fail, we should look for this liquidity above here. I trade the morning session, the AM session. Ideally before 11. That's my best, where I have my best data based on the trades that I took. For example, if we are going, this is the 15 minutes auto block. You see? Let's see how we use this, the 50%, the mean threshold, this candle. Ideally, I personally prefer to trade like from high, like external to internal, or after taking like one session high and lows. I don't like, for me personally, to trade like inside of these ranges because we can go like upside and down, and but this is just for the purpose of tape reading what the market is doing right now. But yeah, exactly. All the premium array will be run through since that inversion didn't hold. So this, if you are expecting higher prices, this is your inversion. If not, this is your CB. If you are bearish, and we have these relative equal lows here. Oh yeah. And also look how we are just at the consequent encroachment of the regulatory nose cap on Nasdaq. And since we have this stop rate inside of fair value, this is better to look for shorts instead of longs. Yeah, this year. because the gap. Let's see if the market wants to deliver those lower prices. Little SMT here. This is like a micro turtle soup, you see? Oh yeah, the sequential SMT. Yeah, it's the quarterly theoretic thing. Five minutes. Yeah, the event horizon was nasty today at the open, and also for the reversal. The regular rain hours deviations, how I use them? Sure. Okay. This one layout. This is nice. Let's see if well, this is a template. This is something that ICT teaches. It was mentioned in the previous 2023 mentorship, how to use the regular train hours projections to anticipate protractions and targets based on the deviations of the gap. He didn't share like the specific number of deviations to look for. This is like based on what um, Dexter said about his power of three findings, and I tried to replicate those projection, but framing the power of three for the regular training hour session. But instead of measuring like swing points, I'm using a time-based element like the opening range gap, and I use standard deviations to anticipate the protraction or the looking for reversals. Depends on the profile that I am expecting for the day. Okay, so for example, on this day, that yesterday, that we were not anticipating like to come back again to this low, this high, sorry, here. You are not anticipating like uh, upper deviations of the gap. Okay, so we can, I use symmetrical projections of the gap based on these specific numbers. Okay, I use 1, then 2, then 4, and then 8. Oh, sorry. So if you're anticipating like a breakaway gap, you can look for these areas as potential zones for either distributions or reaccumulations of price. Okay? So many times, for example, this breakaway gap, when we have these big gaps, I'm using like only half deviation, or because I'm not expecting to double the size of this gap. You see, with this is really far. So if you use half deviations of this gap, I don't know why it's not showing, but it depends on the profile. It's not like a, if you hit this deviation, then price should reverse. It's all based on the narrative and what you're expecting of based on high prices, and as a confluence works great. But it's not like something like rule based. That's why it requires like experience to how to trust these specific deviations. But I like them to have in my chart, because I can use them as a for measure how far are we from the actual opening. This guy, look, for example, on Dow. Do you see how around 4 deviations from today and 2.5 above the market was the high of and low of the day? You see, 4 and 2, 2.5. And you have the previous PM session liquidity, and you reach this deviation perfectly here. See? So, and ES was almost the same as Nasdaq today. See, 1 and 1. And you combine them with other element to as a confluence that we have, like, this is the imbalance that we were looking for in the morning, that is between the previous AM session and the PM session. You see how we rebalance that perfectly, the consequent encroachment of this time-based gap using the power of 3 from the 1 0 for life. Yep. So the it seems like Dow is about to reach like the London, sorry, the launch highs. See? Let's see if Nasdaq and ES are their six sisters, and they push higher. Yeah. Yeah, 100%. And that's why of I'm always trying to frame my trades outside of the gap, because this is fair value from the actual day. So look how the price action is printing inside of the gap. Once you are leaving the gap, you have like from the external, from here to here, a nice move, and from here to inside, a nice move. But yeah. Yes, it's about to reach the launch high also. So let's do like a quick summary of the how to trade the PM session. Okay, so this is the PM session. Okay, this is the PM session. So we have the 130 open here. We should see where is the 930, the 130 opening in relation to the previous range. We have launch, high, okay. Mm, where is this? I don't find the line well. So this is, we are using this time-based range to anticipate if we take the lows and we have an S&T as a confirmation, a retracement into the equilibrium of the launch session. Once we reach the equilibrium of the launch session, we should look for a retracement in order to continue to the launch high, where at what time? During the last trading hour of the session, the power hour of the market on close macros here. Based on these layouts. You see? So PM launch consolidate, we take the launch highs and we move lower. And then during the market on close, we can retrace again or then continue to move lower. Okay, so if you are opening near the equilibrium of or launch, you don't do nothing until you reach one of the extremes of the range. For example, we are opening at right at the equilibrium. I don't like these conditions. And you can trade or wait for an SMT at the upper quadrant here if you're bearish. One of the assets takes the high and the other one reach the upper quadrant, and then we are looking for the lows here. Okay, so it's basically the same approach that Forex for Living has for the daily candle. For example, he used the equilibrium a lot of the previous daily candle and where you are opening in relation to that specific candle, external to internal or internal to external. So the most important part is where are you opening in relation to the previous range. Okay, so for example, today we were opening really close to the lows and we had an SMT as a confirmation, changing the state of delivery, and we target the equilibrium and then the external liquidity or launch highs. For the launch, if you are a launch trader, it's the same thing, but you are using as your framework this if you are a launch trader, you do the same thing, but for the this is your AM session. So you wait for a confirmation at the upper quadrant. Look how we open almost at the equilibrium of the AM session. This is why I told you that I don't like where we are opening at the equilibrium of the ranges, because we tend to do this.
I just want to say tremendous amount of respect for you and basically reading these high resistance liquidity run conditions because if anybody also has not been a part of recent streams and that that this is not easy and this is obviously very challenging. It clearly said you didn't want to see the lower low get tagged on YM. You were tape reading that initially, ran the high, NQ, relative equal highs, ran, perfect delivery, right back to the equilibrium of the range. Just want to put out for days that you have the seek and destroy profile or a consolidated range. please, 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 just put the EQ of the daily range on your chart and just watch the liquidity pools that stack up at or near those levels on these days.
Now you see how we are having again for the market on close, the SMT at the launch highs. The target that we were looking for, these launch highs on Dow. This was reach. Also on ES here, and Nasdaq fail, and now we have these launch lows. Sorry. Yeah, during the at extremes of the range. Now everything here now is like a low resistance liquidity around here. And now, for example, Nasdaq, since was the one who failed to take the highs, is better for look for short. I don't trade like in these conditions, but I'm just here for the purpose of tape reading what I'm seeing. Yeah, we have this little imbalance in 1 minute here. So yeah. I think that we can go a little bit higher if this was short. If we think like this is the original consolidation. Mm. If you think like a market maker model, this was the original consolidation, first accumulation, second reaccumulation, smart money reversal, taking buy stops, displacement, an SMT at the session high, and let's see if we can run this. Yeah, I love avocado so much also. See you, brother. Love you. Thank you, David. Have a wonderful day. Oh yeah, I approve that combination. It's good. We should not do this. You see how we are expecting the equilibrium of this consolidation? Something that I don't like. How do you mark the streams of that range? Uh, those are the quadrants. Like this one, it's a Fibonacci tool. And I have the quadrants of the range. Yeah, I grow avocados also. I have a farm. Come on, Nasdaq. Do you count the S&P if ES makes equal highs on M1? Where? Like these ones. So remember the same logic. Let me how we are expecting the equilibrium of this consolidation. It's we should disrespect this if we are going to continue lower. But from the last trading hour of the day, this is the power of 3. So like a micro session inside of the PM session. And we are gonna do the same thing that we did. Thinking in like a micro power of 3 for inside of the PM session. We take the external liquidity from this range here, and we have SMT, and we are reaching the equilibrium. It's actually, see, this line here. This point, the equilibrium of the previous range. Yeah, I'm recording the live stream. So if we are trading external from the previous PM session, and you took, for example, a short near or close to the external liquidity after you saw the SMT and the state change on the state of delivery in lower time frames, first partial is the equilibrium of the range, or ideally near to the lower portion of this range. That is just here where I put the partial and break even. Here, if you took the short here, you wait. Once we reach these lows, you put your stop at break even and you take partials. we have these relative equal lows. But do you see how we are also trading inside of the gap? Let me remove all the drawings. The same logic for the seek and destroy conditions. It's valid for every gap. New week opening gap, new day opening gap, regulatory hours gap. When we are referring many times to that gap, it's because we are consolidating or on a seek and destroy profile. So there you go. It's a short. The 350 macro is delivering price beautiful towards the target that we had. It was from here. You took partials below this low and put your stop at break even. That was the idea. So do you see how we navigate these horrible conditions successfully, trading sessions highs and lows? From here, from the S&T that we had at the lows with Dow, we were expecting to see if we could run the launch highs that we actually did it. Here. And once that condition was met, we had again S&T with Nasdaq from the launch highs. And we had these relative equal lows that was created from the S&T with Dow here. Boom. I think I will start to charge my Discord because so, And you have the Liquidity Depth Pro tool with alarms. If you have the access to the lead collection, there is your time-based SMT. You see? Both Dow and ES took the launch highs. Nasdaq failed. SMT. Change on state of delivery. 2022 model. Target opposite level of liquidity of the previous session. If you don't have a model, you can trade the one setup for life. It's session highs and lows. So I think that you saw it live today. So if you have questions about the presentation, remember, study the month-end core content from ICT. This is not my stuff. This is all from ICT. I'm just refining his content. For example, here's a market on close macro, and I'm using also the regular trading hours gap inside of these profiles to anticipate which profile I'm trading during the day. So I have like my own model, but the foundation of my trading is the one setup for life. Yeah, Carl has the WAC model. This is an amazing, it's a crazy model, but requires like the understanding of fair valuation from regular trading gaps, new week opening gaps, new day opening gaps. And that. So remember that since Dow took the launch low and the high, this is the strongest. If you are short on Dow, target is equilibrium of the range. Just right there. Because this could be a breaker. And you can have like internally scam, like a stop rate here and keep moving higher and consolidate. So if you want to short the one that failed to take the high, this is a you will have the low resistance move from that asset. In this case was Nasdaq. See, clean move. It was a 100 points move. Not bad.
Hefe, I hope you have this recorded because that was absolutely insane and crazy and beautiful. And I know you're not trying to scream up and down and such, but that, that was crazy. Uh, you walking the
Yeah.
dog, my man.
Yeah. Yeah, I have recorded everything. Thanks for the signal. We have other people who can yell. Yes, I need to learn some entertainment skills like Patrick Whelan. Yeah, but yeah, I hope you like this presentation. I think that was really good. If you don't want to trade the AM session, basically I taught you how to trade the PM session based on the launch. You frame your trade with launch. But yeah, in the Discord, we were anticipating lower prices for today. So yeah, he attracts the wrong people. Yeah, I don't like to be like the Turner. I don't know how to do that, but I just tape read and trade. Thank you, brother. Yeah,
Yeah,
you can.
if you have not already, please drop some love in the chat. I mean, this has been an absolute amazing stream by Hefe and the engineer, and we really, really appreciate him a lot. So if everybody can please drop some love in the chat. It's literally been a 2-hour stream. Him giving you a candle by candle tape read session. Just been absolutely phenomenal, and we're really, really appreciative of him doing this. Uh, Engineer, you are absolutely welcome at any time, and I know that everybody here is extremely grateful for things that you said and the guidance that you provide for our community.
It's my pleasure to be here and share with you this time. I'm always grateful for be part of the community, and I'm willing to do this many times because I love the family, the community that we have. So thank you for having me. I appreciate you for being here also. And yeah, thanks so much.
Thank you, Hefe. And if you can, I think that I have the link here, but let me grab the WAP link for people to join your Discord and such.
Yeah, please. The recording will be uploaded maybe during tomorrow or during the weekend because I have to upload it to the YouTube, and let's see if I can edit it to make it better, but it will be uploaded here and in my YouTube also.
I just dropped the link in the in the chat for anybody that wants to go join your Discord. There's the
Mhm.
link. And again, we really appreciate everyone from being here. I do want to give away one RTH gap to someone that has not, tried the tool. I think that that'd be an amazing thing, an opportunity for them to, if they are still here, they have to be here. So if you are here and you've never tried the RTH tool or you don't have access to it, then you'll be able to participate in the giveaway. We really just want to be able to, bless you guys with an opportunity to see the same vision as the engineer. So. I'm going to do a very, very quick giveaway. It's for anyone that's honestly paying attention. It's not meant to be anything that's, larger. And it's literally going to be 30 seconds just for the people that, are here. So it's going to be one winner, RTH, 1 month, free access. Thank you. Appreciate you. So yeah, for anyone that's in the member area where they don't have any of the access to any tool or the RTH again, so I want to be able to give back to you guys. It's awesome just seeing another lens, and this tool was specifically coded for the view of the engineer. So
Yeah.
we appreciate everyone. So it should be wrapping up in 2 seconds. Hopefully the giveaway. Diego, are you a current Pro Plus? You're a Pro Plus member, but do you have the RTH tool? I don't know if you do. It doesn't look like you do. Okay, just open up a ticket and we'll get you access. Congratulations. Shout out to you. Appreciate you being here and showing support. So awesome. Shout out to you, Shibby. All right, everybody else, please take it easy. Have a wonderful rest of your day. We appreciate you being here. And if you have any questions, engineer is always in the general chat. Happy to answer questions, right? So
All right.
without further ado,
Have a
engineer,
wonderful
love
day.
you, brother. I appreciate
Love
you.
you. See you. Have a wonderful day.
And
Love you. Bye
yeah,
bye.
call me anytime, brother. All right.
Yeah, we should.
All right.
Bye
All right.
bye.
Much love. Bye.